You are listening to ChartingWealth.com for Tuesday, the 18th of October, 2016. Let's jump right into the market, which is still in a long-term downtrend. Market was down over the course of the day. We have a green up two-day candle, but it's really not much more than a spinning top. The market is in a long-term downtrend on the weekly chart and also on the two-day chart. Derivative oscillators continue to accelerate down, as has, most importantly, the MACD on our two-day chart. If we jump in and take a look at our 4-hour chart, what do we see going on? Well, the jump-in point was all the way back on the 11th. Those of you got in that morning, even if you waited until awfully late and jumped in sometime in the afternoon, even at the bottom of the chart, you are still in the money. You were a lot more in the money when we reached our lowest low on the 13th. But again, it's important when the market is in that mood to roll over, to be ready to jump in at a moment's notice. And that entry point was the morning of Tuesday, the 11th of October. We've continued to see the market trunge down. It then slid sideways a little bit around the 13th. And then again on the 14th started to move over. And of course, throughout the course of the day on Monday the 17th, it was down. Now again, for those of you who don't know how we actually call the market and how we buy and sell, and again, we always do this. We are not a stock calling service. We're an education firm. We ask you to practice with us. We do not give real money advice. We're not telling you how to trade the market. We're asking you to train with us to learn how we do the charts. And when you get really good at it and then want to spend your own money and actually are trained up and feel confident, you can use your own trading technique you develop with the kind of things that we use, because everybody trades and invests in their own way. And we ask you to develop that, but pay attention to what we teach and practice what we teach. And when you get good at reading these charts, then and only then can you make your own decisions. So what we see is a downtrending market, both on the big chart, on the two-day chart, that is the weekly charts, the big chart, the two-day chart, and of course the 4-hour or half-day chart. Now let's go back to our two-day chart. And again, for the record, IYY, the total market was down 0.26%, so a little over 0.25% for the day. S&P 500 down 0.34%. It's down the most of all three of our indexes. That is the total market, the S&P 500, and the Qs, which is the NASDAQ 100. Again, it is also in a downtrend on the weekly chart and the two-day chart. Did see something interesting when we saw the crossover between the two-day chart and the weekly chart. That occurred actually somewhere, right around Monday, the 3rd of October, where we had that crossover. That's sort of always important, that nexus of when that occurs. And we see the derivative oscillators continue to heat up, even though we have a spinning green top. As the two-day candle that closed out on the 17th shows us, we nonetheless have a trending down market. Derivative oscillators continue to expand in its downward momentum, and we see the MACD, our blue MACD line, continuing to accelerate down and moving away from the red signal line. Now, if we look intraday, what do we see on our 4-hour chart? We see down movement in the morning and the afternoon, no up movement, no up wicks. And these are our Heiken Ashi type candlesticks. Those are the only kind we use. We do see derivative oscillator losing downward momentum, but the MACD actually kinked over throughout the course of the day on Monday, heading down. MACD is, of course, our primary indicator. We always like to see how the derivative oscillator fits into the mix, but that is by no means our primary indicator. So we're in a confirmed down move since the jumping in point on the morning of Tuesday, the 11th on the S&P 500. Also, you might say, why would I jump into the S&P 500 while it moves down? Well, there are funds like SH, Sierra Hotel. That's its designator, its identifier. And you can find when you plug that in that it actually moves in the opposite direction. It's the ProShares short. It moves in the opposite direction. It goes up when the S&P 500 goes down. So the smart folks can actually practice making money. That is in your Again, we encourage all of the folks that follow us to go to any of the online brokers, set yourself up a virtual trading account and practice. And you could have jumped in. You can actually see it on this chart too. You could have jumped in on the morning of the 11th, that is Tuesday the 11th of October, and you could have ridden the market up. So again, please make sure to listen to our training on shorting the market. We've actually got one called Inverse Funds, How to Make Money When Markets Crash. So please listen to that. You'll get a lot out of it. Now we're going to go back to our 2-day chart before we run out of our 10 minutes. We ask you to give us every day. The Qs was down 0.28% for the day. It's in a confirmed down move on the 2-day chart, but it's still in an up move on the weekly chart, which makes it a bit schizophrenic. We're very careful, even though the 2-day chart's been a confirmed down move, because the weekly chart's moving up, the market's actually in the Qs has continued to move up. And until we see our weekly trend line crossover going down, we're not going to feel real comfortable in down moves on the Qs. Again, we're not traders on Wall Street. We don't have to trade every day. We wait for everything to set up perfectly for us so that we have the best chance of winning. The last thing you want to do jumping into the market is lose money. Let's look at the 4-hour chart. Again, confirmed down move on the 2-day chart. 4-hour chart crossed over going down on the 11th. So far, it worked. If indeed you jumped in, you did well in a trade like with the QID, which is a double inverse of the NASDAQ 100. So again, you can see it moving up as the market moves down, but we're still concerned with the NASDAQ because it's in a long-term uptrend. And remember, all things being equal, the market tends to move in the direction of the longest trend, which for us is the weekly chart. Now, lastly, we're going to go to the 2-day chart, take a look at gold. Gold was up 0.26% for the day. Now, it is actually down. We have a down 2-day candle because even with that little bit of up movement, gold was more down on Friday than it was up on Monday. And again, we used 2-day candlesticks to begin with. So what do we see going on with our charts? Well, gold is in a confirmed down move on the weekly chart and on the 2-day chart. Now, we have talked over and over again about how sometime in the early portion of the year, gold started working better for us on the 4-hour chart. The only problem is when you've got so much down pressure by the weekly and by the 2-day chart, even when you have a crossover on the 4-hour chart going up, it tends to just slide sideways at this point. When it crosses back over going down, you could look for potentially a good entry point unless this movement continues strong and is strong enough to pull up the 2-day and then the weekly. So again, we don't like schizophrenia. We like all three of our trend lines and that is the weekly, the 2-day, and the 4-hour moving in the same direction. We like to see a backup on that 4-hour, but once it crosses back over going down, that's when you look to jump in and ride all three of those trends. That's how easy it is, my friends. Thank you so much for listening to us. We love to hear from you. If you have questions, problems, concerns, go to the website, chartingwealth.com. Write to us. Also sign up for our daily newsletter. We'll send you out our daily reviews, plus you'll get our weekly review and forecast. If you're not listening to that weekly review and forecast yet, it's only Tuesday. Listen to it as soon as you finish this podcast. You want to help us out? Go to iTunes. Give us a 5-star rating at our podcast. Subscribe to it. Say something nice about us. You can also follow us on Facebook, Twitter, Instagram, YouTube. We love to hear from you. Subscribe to our YouTube channel. You will get the latest uploads as soon as they occur. Thank you so much. God bless. We appreciate you helping us with all of our metrics. I hope our broadcasts are helping you. They darn sure ought to be. You want to really supercharge your training? Listen to the training that we have on our daily market worksheet and how to use it. That will turbocharge if you will start doing that every day, filling out that daily market worksheet. It'll help you more than anything else, and you can fill it out as you're listening to our 10-minute podcast. Thanks so much. God bless from chartingwealth.com.